Welcome back to From Corporate to Cashflow. We're Andrea Cannon and Liz Schwab, two pharmacists navigating the process of building time and financial freedom through real estate investing and lending while working our day jobs. Navigating the journey is difficult, but our podcast guests are experts in showing us how it's done. And today we have Steven Loewer. Steven, thanks so much for joining us.
Thanks for having me. Excited to be here.
Yes, thanks so much, Stephen. We're really excited to hear more about your journey, and I think it's something that both Andrea and I are very interested in ourselves. So to get started here, we would love to hear about how you got involved in real estate. So did you ever have like a regular, quote, regular W-2 job, and how did you get interested in real estate?
Yeah, good question. So I'll start. A lot of my framing is going to be around my mom. So we'll go back to my mom lots. So I might as well start with her. So my mom she grew up on a small farm. She's one of 9 kids, constantly battling for, get enough food on the table, and you got to eat quickly. Otherwise you don't get enough. Anyway, so she was constantly looking for ways to help raise all of us. And I'm the fifth of 7 kids. So, and when I was about 10 years old, my parents started investigating and learning more about real estate. And so they had bought a few rental properties. And so as a kid, I would go to these rental properties, not really understanding what they were, but we would go and clean them up, fix them up, paint fences, renovate, do all the fun things. And then as I got older, those tasks got more, bigger. And it's like, we're going to go and like install a brick patio at this rental property. And so we're gone a whole weekend, and I'm like, I don't know how to do brick patios, but so that was my learning and experience. And then I'll share a quick story too. So we were in another city about 3 hours away, and we were cleaning up after a tenant had moved out and they'd left a bunch of junk. And so we loaded everything we could into this trailer that we had. And then it was like 10 o'clock at night, and we wanted to drive all the way back home. And I was like, well, Mom, let's just pull over somewhere and just find a dumpster and we'll just dump it. She's like, oh, I could never do that. Like, right? Like she was like, I need to ask permission from somebody. Anyway, so we looked around, couldn't find anything. We finally found something. So I dumped it, and I think it like ruined my mom's week. She had to like track them down and call them and be like, I'm sorry, I dumped stuff in your dumpster. And so that's the type of person my mom was. So very entrepreneurial, but very honest, and very had a lot of integrity. And so so they had acquired a number of properties, and I think at their peak they had about 25 different properties throughout Alberta and Saskatchewan in Canada. And my mom, she realized, she said, I'm never going to be able to afford to help put all of my kids through university. But if I can help them each buy a house or buy a property, hopefully they can use that to, live in it while they're in school, maybe rent it out with friends. Maybe it'll be their first property, so they can, leverage that and grow into another one, and use that to help somehow pay for their education. So that was her goal. And so she helped each of us acquire property. So my first property that I bought, I was just over 19 years old. I had luckily come into some money. Actually, I was in the United States driving, and we got hit in a car. And so I actually got a small insurance settlement. So I had about $10,000. And back then you could do something similar to Subject 2 in Canada. It was called assuming a mortgage, but without being approved. So you could just take over the loan. And so my mom helped me find this property where I bought a single family home. It was just under 200,000. I put 10,000, and that was the down payment to take over the mortgage. That was my first foray into real estate. So I rented it out, and I was able to buy my first property at 19. The only reason I needed my parents' help was, one, they helped me find it, but two, the sellers were really nervous about letting some 19-year-old kid be responsible for the mortgage payments. So they wanted Mom and Dad to sign on the deal as well.
Yeah, no, this is great. 19, wow, that's amazing. It just sounds so crazy to me because I had no idea what the heck I was doing. I still don't, but especially when I was 19, right? Like buying a house was not even remotely close to being anywhere on my radar, like whatsoever. I was trying
Right.
to figure out how to like cook macaroni and cheese. So like I don't know. And I'm glad that your mom like instilled that or had that that thought process that I'm not gonna be able to help all my kids, but if I can help them get into their first house, because man, looking back, like, uh, not to say anything bad about my parents by any means, but like that would have been really great because everything gets delayed, 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 and everyone knows the cost of houses just keep going up and up and up. So man, to be able to do that for your kids and help them with that process when they're young, that really can set them up for so many opportunities in the future. And if I had kids going forward, I think that would be like one of my main priorities, is to try to figure out how to get them into housing early to
Yeah.
set that platform. So
And the amazing part too wasn't necessarily that the real estate asset did amazing things, which of course they generally do, but just the concept, that the learning curve that you go through, that suddenly at 19 you're responsible for this house. And I definitely took it for granted. I remember the house was actually pretty new, and so there was no landscaping done, there was no lawn. And so it was just a dirt front lawn, and the tenants were there, and the lawn just kept growing and growing, and it was just these tall weeds, and there was no way for them to cut it down because the lawnmower wouldn't even work, right? And so my mom's like, hey, you're going to get like complaints, you're going to get fines from the city, like you need to go and sort this out. And so again, I'm over there like weed whipping, going, oh, this is kind of crummy, and not really fully understanding that the full responsibility of it. But sure, you sure learn quick when it's like, oh, well, this is kind of my deal, right? It's no
yeah,
longer like you need to go do some chores. It's, hey, this is your responsibility. So
right.
that was the huge lesson for me, was just learning all of that. I'll give you another really funny little story. So the tenant that I put in, he was they were building a bigger house on an acreage. They just needed a place to live while his place was being built. And and so he negotiated with me. He says, well, you're asking this much for rent. I don't want to pay you that much. How about if I prepay 3 months in advance? Would you give me a little discount on the rent? And so I said, yeah, sure. I'm open to that. So I collected the security deposit plus 3 months in advance. So I had 4 months in advance in cash. And so I'm this 19-year-old kid, and I walk in with this wad of cash, almost $6,000 worth of cash. And the bankers just didn't, they're like, we can't take this. We don't know where it came from or how you got it, and why you're walking around with $6,000 in cash. And anyway, so that was my other.
You're like, it's not drugs, I promise.
Exactly. I didn't really
Okay.
realize what the problem was until somebody explained it to me. I'm like, oh, I see.
Yeah, right, right, right. Yeah, I bet they definitely don't see that site all the time, right? So,
Right.
yeah, yeah. Okay, so this makes sense. So you got started early buying, get that house at 19, and then kind of how did this progress into your interest and development into real estate?
Yeah, so I actually sold that house regrettably, and I used the money so I could go and serve as a missionary for my church. So I went and did that for 2 years. And while I was there, I was trying to figure out, well, what is it that I want to do? What do I want to be when I grow up? And I came back. My cousin had just finished his degree in finance with a Bachelor of Commerce. And he's like, yeah, it's really good. It's cool. You learn about this and that. And so I'm like, okay, sure, I'll try that out. So I jumped into that. And it wasn't until my 4th year in my degree that I finally figured out, I'm like, oh, I definitely want to do something with real estate. And because I was like, I actually took this, it was like a, discover your talents type of course that they offered, which was pretty good. And so one of the things in there was to identify, what you're good at and what you're interested in and things like that. And I was like, well, I'm always reading real estate books, investing books. I should probably just do something with real estate. So, so I came out of university. I got a job with a real estate company. They were providing information to builders and developers on what to build for new construction. And so I was an analyst doing that for about a year, learned a little bit about that side, but it didn't really fill my need for the financing side. I really liked the numbers part. And so I moved on, and I was training to be a commercial mortgage broker. And the guys that I started with, they had quite a bit of experience with private lending and securing deals with private capital. And so I learned a little bit about that. And then the credit crisis happened. And so nobody was lending, nobody was borrowing. And they're like, hey, we can't really afford to keep you around, but we're going to introduce you to this really quirky guy that does apartment flipping. And so I said, well, I appreciate the referral. So I went and met with them, and I was there at that job for just over 7 years, I think. And I really learned a ton there. It was super great education. we basically would buy a small apartment building, fix it up, and then resell it. Similar to a buy, fix, and sell type of house. Although we didn't actually do a ton of fixing, we would do a lot of the optimization that didn't require a lot of renovations because there's a lot of risk in renovations. So we would try to decrease the expenses, increase the rent roll, just make things. If you take things that are being run by a mom and pop, they've got their rent roll written down, and you systematize that, and you make that into a good clean package. You can usually turn around and sell that property for a higher price. And so that was our goal. Was we would buy it 5 to 10% below market and sell it for 5 or 10% above what we paid. But the coolest part about that was everything we did was short term. And so, as you can imagine, no banks wants to lend to you for 6 months. And so almost all of the capital that we used was creative capital, either seller financing, agreement for sales, wrap mortgages, or private financing. And so it was my job to go out and find all of that capital. So I was in charge of doing the underwriting, the due diligence, putting the whole capital stack together. And then also when we'd sell it, we would generally sell it with seller financing. And so again, I would structure those deals and work with the buyers to help get us paid back out. Because our seller financing, we'd usually carry it for a year or two, and then work with them to get it refinanced and pay us out. So during my time there, we bought and sold over 750 multifamily units and did about 200 million in transactions. It was super cool experience. Learned a ton. We were closing on almost a deal almost every single month. So that was super fun.
Holy crap. Okay, yeah. That's way more than I was expecting. Okay, so clearly you have a lot of experience here. And then what did you transition to after this period?
Yeah, so we grew the company and we were doing quite well. In fact, we really liked the business model. And so we were looking to expand to other markets like Miami and Vegas and Phoenix. And the quirky owner said, no, you know what? I think now's a really good time to shrink. And so it's like, all right, well, maybe now's a good time for me to move on. And so I talked to a few of my contacts and I said, hey, I'm thinking about moving on and starting my own thing. And they said, oh yeah, we'd love to continue to use you to help us, put our money out and underwrite deals, analyze deals, and find safe places for us to lend our money. So started Lions Den Capital in 2015 and been doing that full time since.
Very cool, very cool. So you were still in Canada, is that correct?
Yeah. So all this is all up in Canada. You bet.
Okay, perfect.
Yeah.
Wow. Can you give us like a little bit more detail of like what percentage of like what types of operations you're doing specifically with the private lending?
Yeah. So we position ourselves as a solutions-based lender. So people come to us with a problem, they need some sort of short-term capital to get from point A to point B, right? So that might be a buy a house, fix it up, and then sell it. In Canada, one of the unique things that we do is we actually lend to homeowners. In the US, I know a lot of private lenders, you just lend on income properties, investment properties, things like that. So I'd say about 60% of our loans are actually to homeowners where they're consolidating some debt, they're pulling equity out of this house to go and buy another property, or pulling equity out to go and buy a business, for example, things like that. And so we do both residential and commercial property. Obviously, with my experience in multifamily and some of the other commercial properties that we were doing, I'm very comfortable underwriting both types of properties and can structure deals on residential and commercial deals. We also do some land. So what's unique about us is we lend out our own capital, my capital, and then we also have this network of high net worth families and family offices that we help put money out for. And so what's really unique about that is every capital pool, every person that we deal with has a different risk profile, has a different lending preference on what types of properties, locations of properties, loan to values, the returns that they're seeking, things like that. And so we can be really quite creative and serve a bunch of different borrowers that most of our other competitors just can't or don't. So they say, well, we can do this and this, but we can't do that. And so we'll look at that and say, oh yeah, actually, our investor, George, he grew up in that town and he says it's just 5 doors down from Uncle Bob's house. He's happy to do that loan, right? So
That's really cool. I like that there's like that connectedness of it as well, because that's really fun. And it makes it nice when you're the person that can really tackle some of those challenges that other people can't, because that makes you kind of the go-to for some
Yeah.
of those,
Yeah, we
right?
love it. So we tell people, we're like, hey, we might not be your first call, but we hope to be your last, right? So after us, there's usually nowhere else to go.
Yeah. Oh
Yeah.
man, that's that's really cool. And it sounds like you really like the private lending space because you stuck with it for quite a bit of time. And so, what are your plans for your business and the evolution of it going forward?
Yeah. So with the private lending, one of the things that I've been working on over the last few years has been transitioning and growing my team so that I can replace myself. So for the longest time, it was just me and an assistant, and together we would be able to tackle and handle a lot of deals. We've grown that now where we're managing just about 25 million, and so we've had to grow our team. And with that, I've also been working on passing responsibilities, daily responsibilities, off to my operations managers and other helpers. And so part of my growth and my plans is and in joining Sub Two and Owners Club is to acquire long-term rental real estate in the U.S., primarily multifamily,
Mhm.
RV parks, and mobile home parks. And so that's something that I've been spending more time on and delving deeper into. And we just are in the process of getting a park under contract right now, which I'm super excited about.
That's awesome.
So that's super fun. So I feel like I'm finally able to take all the pieces that I've been working on, capital, underwriting, commercial property, multifamily property, and apply it all together now into my own and my team's deals. So lots of fun.
Yeah. Since you are, one of the go-to people for your space and you've been doing this for a really long time, what kind of red flags do you notice when you're looking at potential deals to lend on?
So there's a handful of them that I keep an eye out for, and I'm constantly learning too, right? Like I've been doing this forever, but there's new lessons to learn every day. Um, I I actually just took some personality tests and Clifton Strengths, and I was and the what's it called, the enneagram. Yeah,
Enneagram, yeah.
Enneagram, and I combined them, and they're like, "Oh, this is amazing!" Like when I say they, I mean AI is like blending this all together, and it's like, "Oh, you're really good at this and this, and you're this type of this." Anyway, at the end of the day, it's like you're really good at analyzing risk, but you got to watch out because you'll probably the type of person that sees so much risk that it might prevent you from doing something. And I'm like, yeah, that's totally me.
Mhm.
I'm like underwriting this deal. I'm like, well, this could go wrong, and this could go wrong, and this could go wrong, and so I don't want to buy that 20 suiter apartment building because there's just too much risk. And obviously, I'm that's not how you get real estate deals done. And so it actually gave me some tips on how to overcome and deal with some of that. So that was kind of fun. But in general, the biggest thing that we look at, we're considered an equity lender, right? So we're generally looking at a deal and saying, is there enough equity that if the worst case happened, I would be protected?
Mhm.
And so that's basically the first way that we analyze every deal is we say, if we're going to lend this first mortgage on this property, for example, if the worst case happens, what does it look like for me as the lender, and how do I get my money back? And if I don't feel comfortable with what that looks like, and I don't feel comfortable that I'm going to get all of my money back, we just don't do the deal. So
Mhm.
capital preservation is number one for us. So we don't jump into deals because it's super exciting or because somebody's promising us huge returns. We look at a deal on a very, hey, let's look at this worst case. If it doesn't make sense or we're not comfortable with all the things that line up, we're just going to pass on the deal. It's not worth getting excited and jumping into a deal with promised 20% returns or something crazy and then end up losing half or all of our capital. And unfortunately, I've talked to lots of people that have done that. They've, oh yeah, I got into this and I'm learning about that and I'm lending my money and I loaned out 240,000. I'm getting zero of it back. I'm like, whoa, you are doing this wrong. This is not how private lending works, right? So that's the first thing that we look at. The next thing that's probably the most important, I would say, is the exit strategy. Is okay, we're here, we're trying to help you solve a problem, and let's say that timeline is 10 months. What is that at the end of the 10 months? What does that look like? What is your exit? Is it, are you fixing your credit so you can refinance and pay this out? Are you giving yourself some time to fix up the property so you can get it ready for sale? Are you selling another property and you're just waiting for this one for the other property to close so that you can pay out the loan? What does that exit strategy look like? And what's the probability of that actually coming to fruition, right? Every now and then we'll get an application. It's like, what's the exit strategy? And they're like, they're really planning on winning the lottery. It's like, all right, but there's like 1 in 20 million chance that that's going to happen. So what's plan B? Right. So yeah, those are probably two of the biggest things. We also look at, can the borrowers service the debt? Can they make the monthly payments? Sometimes if they can't, we'll build in what we call an interest reserve or prepaid interest, so they don't have to service the debt. Again, depending on the deal, but yeah. So those are kind of a few of the big red flags that we look for. Of course, you just always got to watch out for fraud and anything else stupid that people do because they're fraudsters, things like that.
Yeah. Now I know you said you're protecting against the worst case scenario. I know that in the last around 5 to 6 years in the U.S., the market's just been very wildly variable, right? Had massive increases during COVID. We've had some pullbacks now. Different areas of the country are just doing different things. Like, how's the market around you in Canada, and how has that changed, if at all, how you're doing and approaching things?
Yeah. One of the things that I love about private lending is in general, most of our loans are 12-month terms. Okay. And what I love about that is I'm not a genius, right? Like I can't look out into the market and, let's talk about the stock market, for example, right? I can't look at out 5, 10 years and say, oh, the stock's going to be doing this or that. But what I can do is I can look at today's market in my local region of where you're lending or whatever and determine, I got a pretty good idea of where the market is and where it's going over the next 3 to 6 months. I don't know exactly where it's going to land 12 months from now, but I've got a sense of the direction we're going. And so you can reassess the market every, call it 10 or 12 months whenever you're redoing your loans, right? And so that's one of the things I love about private lending is that you're able to reassess the market. You're not taking a 5-year bet that, the market's going to continue going up. And so that's one of the things that we highly recommend for people. The next step of that, of course, is that through the lending process and default process, if it goes that way, is you have to understand, okay, how do I actually get paid back? What is the process in my local jurisdiction? Is it a foreclosure? Is it a forced sale? Does the court just hand you over the title? And if so, what are the risks involved with that and the timing? And you got to build that into your loan. So for us and where I lend, it's usually I'd say a 4-month to an 18-month process to do a full foreclosure from start to finish, depending on how much equity is in the property and how much the borrower fights and deals with things. And so we have to look at that and say, okay, based on that timeline, we have to be comfortable with, all right, who's paying for the property taxes, who's paying for the insurance, who's paying for the utilities. If the borrower is abducted by aliens and just disappears, we have to know how to deal with all those things. And so having the proper attorney on side is super important. One of the things that I highly recommend to people is if there's an attorney in your area that is known as like a foreclosure attorney, I would talk to them and say, hey, you've probably seen all the things that can go wrong and all the ways that paperwork helps to protect our lenders versus paperwork that wasn't done properly, where people get lose capital or have problems dealing with collection. And so I was lucky enough to match up with a lawyer here in Canada that specializes in foreclosure, and I was able to get all those questions answered, like timelines and systems and process and paperwork and how do you do all these things. And then we use that law firm, and this is another really important thing, is don't ever do a loan without proper paperwork, without using a trust account. Money should be going somewhere. You should never be sending it directly to your borrower. Those are all very important things, but
yeah.
Did that answer? And then some?
Yeah, it does. To your point, lots of important things to think about, right? Especially the foreclosure process. I think it's something that's kind of brushed over a lot when you talk about private money loaning and, oh, well, you can just take the property back if they don't pay you back, or just foreclose, right? Mm-hmm. It's like, to your point, it could take 18 months to get it back, and who's paying for everything this entire time? Like, it adds up very fast. It can be very substantial.
Yeah, one thing that adds up really quick is HOA fees, right? If you're dealing with a condo or something, that's another one that people just often forget. So oftentimes if it's a condo or a townhouse or has some large HOA fees, we'll usually bring down our loan to value to mitigate some of that risk.
Yeah, that definitely makes sense. Do you tend to have a lot of repeat borrowers? Like, are you seeing the same people over and over, or what does that look like for you?
Yeah, occasionally. So we in my business, we actually don't do a ton of fix and flip loans, and so we don't see the same you know, investors coming back over and over. So we have a few repeat borrowers, but yeah, we don't actually get a ton of fix and flippers. And part of the reason is in Canada, our oldest house is like 100 years old, maybe, and so
Hmm.
we don't have a lot of like really old homes yet, if that makes sense. So we don't
Yeah.
have a ton of fix and flipping going on. And it's anyway, the when I look at the US, it's like, oh, you can buy like all these different fix and flips and you can make 100 grand. And I'm like, that's really tough to do up here. It just doesn't happen as often. But so yeah, the market's a little different.
Yeah, well, that makes sense. We have a lot of old houses here, a lot, especially
Yeah.
in Utah. So I understand that. And then I kind of wanted to talk a little bit about your transition from, working for someone to kind of working for yourself,
Mm.
and maybe how you've had to think about your finances or manage it in that transition, and what your thought process was. Like, how were you like, hey, yeah, I think I can do this, basically?
Yeah, that's super good. I was really fortunate when I approached a couple of my investors. I said, "Hey, I'm thinking of doing this transition." One of them said, "Oh, you're going to do great at this," and so I shared with him some of my concerns. I said, "Well, I've got 3 young kids at home. I've got a mortgage. I've got this. I've got this. I'm really scared because I'm a risk averse dude, right? Like all I do is sit here and analyze risk all day. I'm really scared of going off on my own and blowing it up and just falling on my face and, you know, losing everything, right? That's where the risk averse brain goes. And so he's a really smart guy. He was a pharmacist, and within 3 or 5 years of going through pharmacy school and counting pills and things, he recognized that he had more interest in being a business owner than being a pharmacist, and so he quickly started pursuing that and acquired, I think it was 9 different pharmacy um, businesses or locations, and ran those for a number of years, and then eventually got bought out by a larger consortium. And so by 50, 55, he was pretty well semi-retired, and then was looking for things to do. One of them being private lending. So he was experienced entrepreneur, and so he says, "Oh, you know what, you're going to do great." And so we met and we chatted about some of these challenges and concerns. And so he said, "Well, I'll tell you what, let's do a partnership where we'll make sure that you get paid a regular salary, and then everything that you make above that we'll just split. And then if there's a bad month or we need to help cover some costs, we'll come in and make sure that you're stable." And that gave me the confidence and the stability that I needed to go ahead and make that decision. So I felt super fortunate that was available, and that partnership went so well that we did that for about 9 years. And so it was just within the last year or two that that I decided, hey, do you know what? I think I can handle this on my own now. I've grown up.
That's a really cool setup, though. I like that. It's kind of like
Yeah.
entrepreneur training wheels, but a great way
Yeah,
to transition, right? Like,
exactly. Yeah, it was
yeah.
great. And he was very hands off. I think there was only a handful of times where I actually came to them with any type of a problem. And looking back now, I think there was technically like 1 month where I actually needed their help. And so other than that, so of course I lost out on lots of upside because it was more important to me to protect my downside. And so anyway, it was a good trade-off, and it worked, and I'm still here today. So
Yeah, and it sounds like the partnership was successful and you're only kind of going up from here. So
yeah.
that's really cool, really cool. Also thinking about that transition as well, I'm just curious because before, when you are a W-2 employee and you kind of have someone that you're reporting to, it's a little bit different than when you become an entrepreneur and your habits and routines really make or break, right? It's kind of sink or swim a
Mhm.
bit. You know, training wheels aside. So just curious if there are any habits or routines that you've developed and implemented as an entrepreneur now that are a little bit different from when you were not an entrepreneur.
Yeah, good question. One of the things that I found that I was really good at was I was very task oriented. And so if I had a list of tasks that I knew I needed to do, that I would, as an employee, I would get them completed. And so I tried to take that same skill set and move it into entrepreneurship. And it was very similar, just very different because they were now my tasks instead of somebody else. Um, and so I probably worked maybe even a little bit harder the first couple of years than I even needed to because I was so worried about failing and so worried about that downside that I wanted to make sure that I succeeded. And of course you can overdo that as well, right? And so there was probably times where I allowed myself to not set healthy boundaries around, calling and getting deals done at 9 p.m. and things like that. And so because, people and borrowers and brokers knew that, they're like, well, of course I can call Steve at 9 p.m. and he's going to answer, right? However, now I'm like, yeah, it's past 5. I with the family. I don't need to answer the call. I can get it tomorrow. And so that's something I've definitely learned as I've matured in my entrepreneurial journey. But with regards to the other skills, I think that it's a constant um, leveling up process. And every time I think that, like, oh wow, I just made this huge jump in leveling up and being able to, build a team, for example, and hire good people, and these are all skills that you need to learn. And there's no HR department here, right? And so even just onboarding somebody and having set aside time and documents and things to actually train them on, that's just a whole nother skill set I had to build and develop. And so as you build and develop each of those skills, you then quickly realize, like, oh, and now you got to do this. Oh, and now you got to figure out this. Oh, and now you need to figure out this. And so it's just this never ending game. And I look at it a lot like a video game. It's like, hey, you know what? You're never going to pass, level 3 in Super Mario until you have the skills to get through, the end battle where you can then get on to, level number 4. And so I feel like I'm here just hitting up against the ceiling in level 3, and I, keep failing and falling into the fire pit, and I got to go start again and build my skills, and hopefully with all the things that I'm learning and doing, and with some help from AI and Owners Club and other things that we're a part of, that slowly leveling up and hopefully can beat the boss.
I like that. And it sounds like maybe you're a little bit past level 3. So maybe we'll
Well,
give you like 9 or 10.
yeah,
I mean, like, I don't know. It sounds like
I think that's as far as I ever got in Mario, so I think that's why I used it.
okay. Fair enough. I'm like, I don't know about level 3. Well, just thinking about, I noticed that shift in your boundaries, and, Liz and I are also really focused on traveling and getting outside and really enjoying life while we're building businesses, right? And so it sounds like you're kind of making that transition yourself as well, defining more work and home time and being with your family and really being intentional. So just curious if you have any upcoming bucket list trips or experiences you're hoping to have in the next couple of years with that end.
Wow, good questions. My oldest son just got his mission call to go and serve for 2 years. He's going to Guatemala. And so I had in my mind thought, oh, I better plan a big trip and go away with my son before he disappears for 2 years and comes back a grown man. And so I all of a sudden, I just feel like this has come up really fast. And so we're talking about, what can we do or should we do before you take off. Luckily, we did go to Europe, me and my 3 kids, and we went and caught the end of the Olympics in Paris, France, which was super cool. So that was kind of our big last, hoorah as a family that we got to do. And so, but yeah, those upcoming trips, there's so many things in the works and in the planning, but I don't have anything locked down. I do want to go to Asia very soon. That's probably the next one. So maybe the Philippines, maybe Thailand. Yeah. So lots of things, lots of ideas. My sister lives in France, so we get over to Europe quite a bit to go visit her. So we're due for another France trip soon. So might get over there as well.
That's the best way to do it, is to find some type of relative that
right?
lives in another country, right?
Home
You convince
base.
other people to go live there and then do
Exactly.
that easy housing and everything recommendation. So like that's like the perfect setup. I like that.
You got it.
Hey, so can you just tell us a little bit more about what you're specifically looking for? Like maybe if someone wants to collaborate with you or give you some money, what does that look like?
Sure. Yeah, I appreciate that. We have a couple ways that people work with us. One is if they have capital and want to learn how to lend, we actually have a course that we can teach people how to lend their money safely and securely. We go through all the things that we talked about, how to source a deal, how to underwrite a deal, how to fund a deal using the proper paperwork, all the checklists, all the things that we go through. So we have that's available. If you're in Canada, we can help you place your capital in Western Canada is where we lend. And then in the US, we're looking for these opportunities for, as I mentioned before, multifamily RV parks and mobile home parks. And so if you have a lead on any one of those that somebody's looking to sell, you can bring those our way and we can pay a referral fee. Or if you want to be a part of one of those projects, you can reach out to me. I don't know if they can see it on my screen, but at Steven Loewer is my Instagram handle. So just reach out, say that you saw me on the podcast, and yeah, I'd be happy to connect. And one thing that I'd love to do as well for your listeners is we have a starter kit, a private mortgage starter kit that we'd love to send out. So if anybody messages us the word corporate, right? It's corporate to cash flow. Is that the name of the podcast? Yeah. So
Yeah.
message me the name corporate to my Instagram, and I'll make sure that you get get a starter kit, which basically breaks down all the things that we talked about on how this all works, types of returns you can expect, and yeah, what the next steps are.
Awesome. Well, we super appreciate you coming on and sharing all this information because your journey is so fascinating. I too wish I would have gotten started in college age timing with investing. And I also, strangely enough, was making mac and cheese with my now husband at the age of 20. We had these 3 cheese mac shells that we really, really liked. So
There you go.
much you were doing much cooler things at that point in time, and so I just really appreciate hearing your journey, and I love the lending. Liz and I are very passionate about this space as well, and it's a really cool opportunity to be involved in real estate in that way without necessarily owning the properties, and so we've really appreciated that as something that we've gotten involved in as well. So thanks for everything that you've been able to share with us today. It's been really, really fascinating.
Yeah. Can I share one more quick story? Just hopefully it'll help impact some of your listeners. So there's this elderly couple, and I came across them probably about 5 years ago now, and they were in northern Alberta, actually northern BC, and they decided they were going to start a tire mechanic shop. It was one of the big brand ones. I won't drop the name, but and they worked their butts off trying to get this thing to work, and they were close to bankruptcy a number of times and constantly battling. Anyway, eventually they started making some profits. Eventually they bought and owned the real estate where they had their shop, and at the grueling age of call it 65, 67, somewhere in there, they were finally able to retire, sell the shop, sell the real estate, and had this nest egg. And then they learned about private lending. And so we've been helping them in they were a bit skeptical at first. They're like, wait a second, you can earn, double-digit returns with, and I don't have to do anything. And so they started off with a small chunk of capital, and we've slowly grown that over time. And now every time I meet with them, they just go, oh, Steven, if I'd have just met you 20 years earlier, I could have retired an extra 20 years earlier if I'd have known about this private lending thing. They're clearing over $40,000 a month right now, and they do little to nothing. Yeah. And they just let us know if all the payments go through, and if one doesn't go through for some reason, they let us know. So it takes them about 2 months or 2 hours per month is what they put into the business, and we handle the rest. So anyway, that's an example of one of our larger investors. Of course, not everybody's clearing 40 grand.
Yeah, but I think it's a really good point. And, I know we kind of touched on this earlier, but it's something I did not know existed before. I'm glad I've learned it now. I'm not 65, right? So I have learned it earlier than they did, but I still wish I would have known about this 10 years ago, right? When I was getting started more in the real estate space and trying to understand where I could deploy capital. I always thought it had to be, somebody who had done all of those things and then started being a private lender, right? But that's not the case here. As you just identified, those are, one of your larger clients, and it's not everybody like that. And they even got started small, even if they did have a big nest egg.
Yeah.
So
I think one of the other things too that I'm sure you guys have talked about before, and I think it's super important that everybody knows, is that most everybody that's got a W-2 has some sort of a retirement account, right? A 401k, LIRA, I think you guys call them. They're different in Canada, but and so of course you can lend out of those accounts as well. And so for anybody that's got a pension or whatever they've got through their company and things like that, they've socked away some money. For us, we usually start with about $50,000. Once you got about $50,000, you can start considering lending that out. And I started with $47,000 in my retirement account, and all I've done is loaned it out on first and second mortgages. And now that account 5 years later is at $209,000. And so you can start off small and just continue to grow it. My goal is to get that to $1 million by the time I'm ready to retire, which I don't think is going to be too difficult. I think I'm on track to double about every 3.5 years. So
yeah, that's great.
Yeah.
No, that's really cool. That's such a good story. And
I don't share that to brag. I just share that so people can hear and understand.
Yeah. And I think that's a really key thing, especially with starting from not such a low amount. That I'm not trying to take away from that, but it's not the millions that you think you needed, right?
Exactly.
To get started. And so that's just, man, I really appreciate that insight. So thank you so much.
You bet.
Yeah. And thank you everyone else for listening to this week's episode of From Corporate to Cashflow. We will catch you next week. Hey, it's Andrea. Thanks so much for listening to this episode. If you liked it, I'd love it if you hit subscribe. Thanks so much.